Hey, what's going on, guys? It's your boy Freddy. Welcome back to the channel. Today I want to go over a Canadian penny stock that I believe has a lot of potential for growth in the coming years. Penny stocks are obviously very risky investments because they have a lot of volatility. One day you could be up 60% and just as quickly you could be down 80%. So it's important to understand and manage this risk and volatility to have success when investing with penny stocks. In my opinion, if you do choose to dabble with penny stocks, you should do it with money that you aren't afraid to lose. So if the stock were to go to zero and the company were to go bankrupt, you would of course be bummed out, but you wouldn't worry about it too much in the long term. That being said, penny stocks do have the potential for massive gains and can help small portfolios to get off the ground and get through the early hurdles of investing where, although you may be seeing some percentage growth, the gains are extremely slow. When looking at potential penny stocks to invest in, you should be looking for a few key pieces of information to help you make a decision. This info includes having a strong understanding of the business model, knowing the company's financials, having a strong conviction about the management team, and also knowing the overall sentiment of the company. The stock that I want to go over today has the potential to fit this description, and that stock is StorageVault Canada. StorageVault Canada owns, manages, and rents self-storage and portable storage space to individuals and commercial clients. They also store documents, manage data, and provide shredding services to business, healthcare institutions, and government sectors. StorageVault is the largest and fastest growing storage company in Canada with over 1.4 billion in assets in various different properties across Canada. The stock is currently priced at around $4.13 a share with a market cap of $1.5 billion. Although this is technically classified as a real estate stock, the company doesn't follow the traditional model when you think of a real estate company. Instead of owning housing or office space, they own storage facilities and have really established themselves as the biggest player in that industry. Looking at the self-storage industry as a whole, the business is booming and is expected to grow massively over the coming years. In the US, the current market is about $87 billion and is expected to grow to $115 billion by 2025. And a lot of this growth does transfer over to the Canadian market, and we are expected to see similar growth numbers. As we begin to urbanize as a country and our population continues to grow, we have seen that people will begin to run out of space to store their things, and many of them are already turning to self-storage as an easy and hassle-free way to store their belongings. StorageVault is very committed on growing their business over the coming years. Right now, their main method of growing is by acquiring smaller companies in the same industry and building out a huge conglomerate made up of these smaller companies. This is a really smart way of building out the business quickly, as they don't have to buy and build their own properties all over the country and start from zero in terms of clients and advertising. Instead, they buy already established smaller names who have consistent tenants and are already marketed within their various areas. This basically means that they are purchasing turnkey operations and can quickly and seamlessly continue to operate without having to rebrand or have major changes to the business. Over the last 5 years, this company has been aggressively acquiring stores all over the country, and on average, they purchase 26 stores for a cost of $250 million per year. Let's take a look at their financials and see if this growth can be sustained over the long term. Looking at their revenues, we can see that they have increased by around 15% since last year, from 134 million to 155 million, which is amazing considering the issues we saw with the illness over the last year. This growth was in spite of the fact that they paused rental increases and fees for a substantial portion of the year. StorageVault was able to quickly adapt their business to accommodate the illness by having a completely no-contact processing system. Their expenses are almost constant as compared to last year, which is also very impressive. They are still operating at a loss, but they are inching closer and closer to profitability. Right now, as they are in the growth phase of their operations, I don't mind at all that they have negative income, as this is necessary to grow the business exponentially as they have over the last few years. Looking at their assets, we can see that they are of course up substantially as compared to last year as they continue to purchase more stores. In 2020, they purchased an additional 16 stores for around $230 million. Overall, their assets have increased to $1.58 billion for a 14% increase over the last year. This company isn't just buying small mom and pop storage properties, they are buying major portions of the market share, and in 2019 they purchased Real Storage for over $275 million, which was their fourth largest competitor. This gives me a lot of confidence in the company as they understand that the self-storage business is poised to grow substantially, and if they can have a larger share of the market now, they are looking very solid as demand increases. One thing I want to go over is their debt situation, as they have had to add on a lot of debt to fuel their growth, and we want to make sure this is justified. Their fixed rate mortgages are up about $20 million and their variable rate mortgages are up about $120 million. Across the board, we can see that their overall rates are down quite a bit as we saw prime rates drop substantially due to the illness. Overall, we saw an increase of about $211 million in debt, And as we move forward into 2021, I do expect them to make more purchases than just the $100 million that they promised on, as rates are expected to stay low, and I believe that they will capitalize on this in a big way. Looking at the stock price, we can see that the company was completely stagnant until 2015, and then after that we saw the 1200% run that they have been on. And this aligns exactly with when the company saw changes in management. In April of 2015, they brought on Steven Scott as chairman and CEO and Iqbal Khan as the CFO. Executive management is absolutely essential for the success of smaller companies like Storage Vault, and we can see that both Steven and Iqbal have years of experience with ownership, acquisition, and development of self-storage, as well as commercial real estate. They have both fitted in perfectly with the new environment and the sentiment of the business, and I believe that they can continue to lead the company in a positive direction. One thing that does bother me about the company is the fact that they are paying a dividend. Currently, I don't believe it is in their best interest to pay a dividend, as this does take away capital that can be used to fuel for more growth. I believe that once they slow down on acquisitions and transition into a more steady and profitable business, that they should focus on dividends. In total, they paid out about $15 million, and to me, it seems a bit unnecessary and it could have been better utilized. This is the one major issue that I do see with the company, and overall, I don't think it should have a major impact, as they are only paying a 0.26% dividend yield. Well, that is my analysis on Storage Vault Canada. Let me know in the comments what you think of the company and your thoughts on their future. Remember to hit that like button down below, as it really does help the channel to grow, and also consider subscribing for more investing videos like this to come. I also have a Wealthsimple referral link in the description that gives you $10 when you deposit and trade with 100 or more, which is an instant 10% return on your money. I'll catch you guys in the next one.